Now let's welcome on board Rohit Srivastava, who is the founder of Strike Money Analytics and India Charts. Hi Rohit, great to be speaking with you yet again. So Rohit, this particular month's expiry has been really great and a volatile one for the markets, but off late we are actually trading in quite a tight range for both the benchmark indices. How do you see this consolidation? Are the markets getting ready for yet again an up move, or do you believe it's time for an elongated breather on the benchmark indices?
So while a breather would have been nice, it doesn't look like that might happen because there's a lot of rotation. Different parts of the market, different stocks are continuously finding buying interest. And rotation is what ensures that after some consolidation, the market again bumps up. The only thing is that we should not expect the same speed that we saw from the April lows, which was more of a panic situation from where we moved up very, very fast. We may see a slow and steady continued upward move with higher highs, higher lows in the key indices. So I think this looks like a long duration consolidation with expiration only tomorrow. We should be coming to the end of this congestion zone and start breaking out from it on the upside is what I'm anticipating. But slowly and steadily heading higher is how I'll look at it.
All right. Hi, Rohit. This is Kanishka also joining in. I want to get your view on the two earnings candidates that we have today, LIC and Hindustan Copper. Both have, had a stellar quarter four. So what are the charts indicating for these? Both have been seeing a rally since morning. So what are the next levels to watch out for these two?
So I can't give stock specific comments, but Hindustan Copper being in the metal space is an interesting place to be. Metals as such has seen a good move in some of the stocks, and I think on a 6 to 12 month basis you'll continue to see that because of growing liquidity and possibly a stronger turn in the commodity cycle that has still not happened in full swing, but I do anticipate that will happen at some point of time.
All right, that's the take on the metal. But Rohit, what's the outlook on the defense pack? No stopping for this particular sector. Stocks like BEL, HAL, they're literally no stopping anywhere, even in today's market. Give us some sense that do you believe that there is more legs to this particular up move that we are seeing?
Longer term, sure, but every time you see something go up one way, you'd like to pick it as and when there are pullbacks. So I do think the longer term uptrend remains intact for the sector, so that is not an issue. You just want to time your entries and not be buying too far high into the move. That's the only near term thing. But yeah, it's become a pretty strong move with very few pullbacks. And I think it's being backed by what we are seeing around the world, which is more and more spending on the defense side.
All right. Rohit, now moving on, let me also get your view on the telco and chemical space. Both have been in focus of late. So what are your sectoral views on this, on these two? Do you think rallies on the cards for these?
So those are not sectors that I've focused on a lot. Specifically, chemicals. It was a long-term underperformer for a period of time. At some stage, you would think that it comes out of that, and you start seeing a meaningful move in the chemical sector longer term. Not sure that has started to happen. In the telco space, we are seeing that. We have seen the breakout, a couple of years back in consistent momentum. But of course, these stocks are very, very limited there. So you're down to focusing only on one or two of the big majors that are driving that entire move. So you don't have that much choice as you do in chemicals across a list of stocks. That's the only difference between the two.
Right, but Rohit, we tried asking the stocks and sectors that we found that are interesting in this particular market. But why don't you tell us that which sectors do you believe can be the outperformers and underperformers in maybe next couple of months?
Yes, I think financials, of course, stands out. They have done well. They've led the rally since January when the market was falling. So I think financials will continue to drive the interest through this move, especially given the interest rate cycle. And within banking and financials, I would specifically like NBFCs as a focus area because they tend to do better when things are good. It's also a place where valuations are low. So it's not just the momentum of the sector, but also the valuations. The same can also be said to some extent about PSU stocks, which had a huge correction in between, June of last year and the recent fall, where from being extremely overbought, many of these stocks have, become oversold and slowly are building a base. Some of them are probably powering ahead faster, as you discussed, defense, most of them being PSUs. The others are moving up much more slowly and are across segments. So whether it is PSU banks or whether it's in the oil and gas area or whether it's in power finance and so on, I think all of them will eventually participate again on the next move up. So PSUs remain a low value pick, which are lesser risk that I think will drive a lot of this move. And lastly, I also mentioned it earlier, is the metals pack, the metal sector, where the commodity cycle is due for a turn up. We haven't seen metal prices move up a lot recently, while the demand remains. But I think the commodity cycle will kick in. So far, within commodities, you're only seeing gold and silver do extremely well. But copper has held out well. Most of the other base metals have not. But I think that should eventually play out as the rate cycle, continues to move to the downside.
Okay, thank you, Rohit. Now, metals remain your preferred pick, is what you said. Thank you so much for joining us and helping us with those levels that you have spotted for us. On that note, we'll let you go. Thank you so much for your time. And
if you like this video, then like, share, and subscribe to ET Now.